You're watching Business Incorporated live from Channels HQ right here in Lagos. Here's what's coming up. Nigeria's local bourse opens for trade in the last trading week of 2023, up about 44.4% year-to-date at the last close. Senegal is set to begin operation of Africa's first ever electric bus rapid transit network in the country's capital, Dakar, by January next year. And the World Bank predicts that diaspora remittances into Nigeria will surpass $20 billion by the end of 2023. Hello, welcome to the program. I'm Laddie Williams. Well, welcome to the last trading week of 2023, and we see major markets are open, starting on the African continent. Now we see the NGX in Africa. It's mostly positive sentiment we see right there, green on the screen in Africa. 74,065 points for the all-share index. That's a new high it's been sitting on for a while now, 0.06% up, while South Africa's index is up big, 2.54%. Other markets we track in North Africa, we see the EGX 30, that's up about 1%. Well, Kenya closed positive. That was the last trading session of Friday, 0.62%. That was before the holidays. That was the profit there we see in Kenya. But let's get a check on the Middle East now. We see it's mostly positive sentiment, but in UAE, we see the Abu Dhabi index, that's unchanged. Right there at intraday, Dubai index marginally up 0.01%, while other markets we track there, Saudi Arabia, we see Saudi Arabia there down 0.30%, while Qatari index, that's up 0.64%. So we're seeing quite positive territory for the last trading week, but these markets were open during the holiday season right here and globally. But let's get a check on what's happening in London now. We'll see it's mostly football. Well, let's bring in Juliana now in our London studio. Great to have you, Juliana. So we see the Premier League, they've halted the EFL New Deal talks. It seems it's some kind of funding issue at this time.
That's absolutely right. Good afternoon, Laddie, and season's greetings. I haven't spoken to you for a couple of days. I'm sure you had a lovely Christmas, and we are here to talk about your favourite topic, not just crypto, but I know you love football, and
yes,
of course you're a Manchester United supporter. So I've tried to wrap my head around this story as best as I can for the millions of football lovers in Nigeria. But of course, across the United Kingdom, we know that the Premier League brings in billions of pounds, not just for football, but for the UK economy. And we know that Britain is the cradle of the beloved game. But unfortunately, if you are not a fan of the big six clubs, so we're talking, yes, Manchester United is still one of them, Arsenal, Chelsea, Liverpool, Manchester City and Tottenham, then typically you don't get the kind of revenue and the numbers coming into the stadium as you would, which is why bosses of the Premier League decided to create some sort of new deal. Now, this new deal would see clubs at the lower end of the table and in lower divisions basically not having to pay the same amount of percentage to the overall cup, because, of course, they're not winning the leagues and getting in the revenue like the others. So this new deal discussion, which I believe is worth about £1 billion, has been a conversation that has been going on for years. And according to reports this morning, the £900 million deal is on a pause. And the reason why it's on a pause, Laddie, is because the big six clubs, those that I just mentioned, are basically not happy with it. On the one hand, you've got the lower division clubs saying that they need more revenue and they shouldn't be putting in the same percentage to the overall cup as the top flight clubs. The top flight clubs are saying basically they don't care, that they should all put in the same amount of money. So it has been put on pause at the moment. Is this new deal going to be something that is going to be signed in the new year? Apparently, ministers across both sides of the House have already commented on the story this morning. Many of those ministers represent constituencies where a lot of these lower division clubs are in. And of course, if their clubs are going into bankruptcy and not getting enough revenue, then it does affect the local community, because of course no one's going to buy fish and chips on the weekend when the matches are playing. People are not buying the merchandise outside of the stadiums because there's just not enough fans, and it is affecting local communities. Jobs are losses. So there is a much wider discussion about this involving the government and levelling up. But I think with the new deal, it's just to decide whether or not the top flight clubs should be paying their fair share so lower flight clubs can continue and obviously promote youngsters who hope to play in the Premier League or one of the English football leagues. How did I do, laddie?
No, you did fantastic. Like I've learned a lot about that deal at this moment, and definitely that's why you want the smaller teams. That's why you see them working so hard so they can get to the top flight at some point. But let's also talk about Manchester United. Now they've confirmed the sale of 25% stake to British billionaire Sir Jim Ratcliffe. But it seems the fans are having some mixed feelings about this.
Yeah, that's absolutely right. I'm a Manchester United supporter. You are, laddie. Millions of people around the world are. We haven't been doing too well recently. Won't they sack the manager? That's a question that, one of the new owners, Sir Jim Ratcliffe, is going to have to answer. He is, of course, a billionaire and a very popular CEO of Ineos, which is a petrochemical firm. Nothing to do with football. However, he is a Manchester United lifelong supporter, which is why some fans are happy with the fact that he has agreed a 25% takeover of Manchester United. I believe discussions have been going on for about a year, but the confirmation came on Christmas Eve, and he went straight to the fans because the fans have been in uproar and have been at loggerheads with the Glazer family, which are a very wealthy American family that have been the largest shareholder for Manchester United for several years now. Fans are not happy with the Glazer family. They believe that they've totally abandoned them and left them to kind of struggle in the markets rather than taking a big hands-on approach with Manchester United. So on the one hand, fans are happy that there is partly an English owner, and perhaps Sir Jim Ratcliffe, being an actual fan of the club, will be able to make some changes. But of course, the majority shareholder of MUFC is still the Glazer family. The fans still not happy with them. You can't, look at a football match at home at Old Trafford without there being some big glaring, signs and placards saying that they want the Glazer family out. But there is a new sheriff in town. Is this going to help our hopes with winning the league? That question, I'm not sure. You're going to have to answer that.
Yeah.
But at least, yes, as you said, mixed feelings.
Mixed feelings.
But hopefully we'll be entering a new era. Back to the glory days.
Back to the glory days.
When we used to be able to show off.
Yeah, but I'm happy we could come back from 2 goals down, against Aston Villa, because when there were 2 goals up, I thought it was over. But great comeback there. But it's the last trading week of 2023. How are the markets kicking off in the UK?
Wow. Last trading week, first trading day back since we had a break for Christmas, very short break, I've got to say. The FTSE is actually in tip-top shape. I think investors are now looking into 2024 with more optimism. Of course, just before we closed for Christmas, we had inflation data showing that it is now way lower than some of the highs it was at this time last year when we're still very much in double digits. The Bank of England and, of course, all central bankers across the world have been hiking up inflation hiking up interest rates to try and combat inflation. Although you hike up interest rates, it costs more to borrow. It does affect the overall economy. So the mood music, I think, for the last trading week of the year is that interest rates may be lower, which is why the UK blue chip index is in green at intraday. The all-share, Laddie, is up by 0.51%. The FTSE 100 is up by 0.52%. And the FTSE 250, the domestic market, that's up by 0.38%. In currencies, the British pound is currently trading down against the US dollar by 0.07%, down to against the euro by 0.1%. And the British pound at intraday is trading flat against the Japanese yen, Laddie.
Right, thank you so much for the update. Can't wait to start reporting maybe rate cuts in 2024. Definitely looking out for that. Thank you so much, Juliana, for the update.
Great.
All right, now let's get a check on Europe now. So a few days before the end of the year, U.S. automaker Tesla is recalling 120,000 vehicles over some safety risks. Over in Japan, Toyota's Daihatsu stopped production in all of its factories in Japan. The auto industry is ending the year in a bit of trouble. For more now, we'll have Wada Imra from Berlin. Great to have you, Wada. So let's start with Daihatsu now. Why did the company shut down production?
Thanks for having me, Laddie. Yes, it's a scandal for the books, and now Toyota-owned Daihatsu has shut down all domestic production of their cars amid these safety risks, at least until the end of January. Basically, it's been revealed that they manipulated safety tests for over 60 models and 3 engines. And some of these cars go back 3 decades. The affected models include some Subaru and Mazda cars sold in Japan, and some Daihatsu and Toyota cars sold worldwide. So Daihatsu announced that they are no longer producing in their units in Kyoto or Osaka, for example. And global shipments is also off the table for now. So this first came to light in April when irregularities were reported. Since then, production was stalled for some cars, citing the same safety issues. The CEO of Daihatsu a few days ago said that they betrayed the trust of their customers. The shutting down of these factories is set to affect 9,000 workers and thousands of suppliers.
Well, that sounds like trouble, definitely. But U.S. automaker Tesla is also recalling thousands of cars. What does this mean?
Well, yes, Tesla troubles are by no means any smaller. The latest recalls are mainly for Model S and Model X cars in the US over a risk that the doors of the car may unlock themselves and, even worse, open during a crash or an accident situation. Now, this is after Tesla recalled over 2 million of its cars on US roads to fix a defect. Now, this issue was about the autopilot and the driver assistance systems in these cars. This came after Tesla checked its fleets with crash tests. Now, add to this the fact that Sweden is investigating suspension failures in Tesla cars, and so is Norway. So it spells trouble for the world's biggest car makers, Tesla and Toyota.
Talk about the markets now. What are investors looking at today?
Well, investors are still enamored by the prospect of easing interest rates. Market sentiment has largely been quite positive since the US Fed's last meeting, which indicated that rate hikes may be coming to an end soon. The dollar was still under pressure as the euro enjoys a 4-month high. Analysts say that since there is not much activity in the economic calendar between, well, now and the end of the year, there is no expectation of any dramatic rises in prices or so. Market analysts are betting on a U.S. rate cut as early as March 2024, as the latest data showed cooling inflation.
All right, thank you so much there. That was Wada Imra there in Berlin, giving us the details from Europe. Well, let's get a check on U.S. markets now. We see U.S. stock futures were flat today as traders are keeping an eye on the S&P 500's march towards record levels there. But you see, it's unchanged for the Dow Jones Industrial Average futures there, unchanged, 37,894 points. We're seeing flat movements with the S&P 500 futures and the NASDAQ, the tech-heavy NASDAQ, 17,084 points. That's down 0.02%. That's the futures market. Let's hear from our correspondent, Maria Bird. All right, we'll get that update some other time. But let's get a check on other markets. Now we see the metals market. Now we see that gold prices are steady today as trading was muted in the last year, the last trading days of the weeks of this year. But the bullion is headed for its best year in 3 on expectations. The Federal Reserve will cut rates in the first quarter of 2024. See, spot gold was flat, $2,067 per ounce. Not far from an over 2-week high of $2,070 dollars hit on Friday. The bullion was on track to mark an over 10% gain this year. That's its best since 2020. U.S. Gold futures, we see that rose 0.5% to $2,079 per ounce. All right, we'll take a break now. When we come back, we'll drill down on some sectors on the NGX. That's our next conversation. Do stay with us. Well, as we approach the end of 2023, the NGX has experienced noteworthy achievements in two crucial domains, the banking and consumer goods. Despite market fluctuations, these sectors have demonstrated unwavering resilience and growth, displaying sustained strength and encouraging trends throughout the year. The consumer goods counter year to date, that's up about 61%, while the banking index, we see a big jump there, 97% year to date. That's talking about the consumer goods and banking index. Well, joining us now is Damilare Ashimiyu, macroeconomic strategist at AfriInvest Research and Consulting. Great to have you on the show. Happy holidays.
Yeah, good afternoon.
Yeah, so looking at both counters now, that's the banking and the consumer goods sector of the NGX. Currency revaluation happened to both and other sectors, but it seems it impacted them in different ways. Talk to me about this.
Yeah, thank you very much, Daddy. So, broadly speaking, right, 2023 has been a fantastic year for Nigeria exchange. Like you rightly mentioned, the market's year-to-date return is in the region of 1.4%, which is perhaps the highest since 2020 when the market did 50% to emerge as the global best performer according to Bloomberg. So in a few days' time, we'll get to know where the Nigerian market performance will rank globally, but I believe it will be among the top 10 given this outstanding performance. Now, looking at the two sectors you just mentioned, yes, there are actually a number of factors that shape the market this year, right? We have fundamental consideration of some parts, because a lot of companies posted resilient earnings from 2022, which stimulated investors' sentiment. One of the drivers of the market this year also is this FX revaluation gain, which you mentioned. We also have cases of new entrants into the market, which added some values to the market capitalization. But sticking to the impact of the FX revaluation, right? I think it was more profitable, more favorable for the players in the banking sector than those in the consumer goods sector. You look at the banking sector, guys, you look at their revenue numbers, at least for the 9 months, you're seeing many of them, nearly doubling their gross earnings. Using Zenith as an example, see gross earning increasing for about over 114% in 9 months, and profit also was in the region above 100%. So that shows the extent to which many of these companies benefited from the FX revaluation gain. As a matter of fact, we have banks like UBA that recorded more than 1,000% gain in terms of FX revaluation gain. So it was largely positive for the banks, and that already tell on the way market priced a lot of the banking tickers. Now, for the consumer goods sector, right, is largely a mixed bag. Depending on what the raw material source of the consumer goods company we are considering, what the source looks like. The consumer goods sector is very broad. We have those that are focused on drinks. We have those that are focused on raw food items. So if you look at the numbers of those in the premium segment of it, those that are largely exposed to importing a lot of raw materials from using FX, 2023 is actually not a very decent year for them, because they booked significant FX loss. We talk of a brewery giant like Nigerian Breweries already booked over 40 billion loss as of 9 months. But when you look at it from the perspective of those in the food producing segment of the consumer goods, those that their raw material needs are widely acquired locally, right? Their ability to play along the dynamics in the macroeconomic environment, because 2023 also will be remembered as a year of high inflation in Nigeria. Inflation now at about 28%, highest since 2005, means that consumer purchasing power was really affected this year. But one thing that most players in the consumer goods sector were able to do this year, which actually helped them in terms of their top line number, because if you sample 100 of players in that segment, right, more than 80% or even 90% are their revenue, increasing. So two things work for them. First is that there was price action, there was price increases across brand level, and the fact that the producers in the consumer goods sector have adopted what I will describe as sachetization. A lot of products have been redesigned to quantities that low and mid-income earners can afford. Things that maybe the non-standard size before was to be 1 kg, but because of their understanding of the inflation dynamics, and now the purchasing power of consumers have become weak. So what they have done is to then create a lot of smaller sizes such that buyers can still stick to their By and large, it was more of a volume strategy in order to support sales.
Yeah, definitely. I see a lot of sachets now of most products that didn't have sachets before. It's quite incredible. But definitely 2023, not so bad for this counter. But what are you seeing going into 2024?
Yeah, so generally, Nigerian companies have actually, over the years, demonstrated their ability to be resilient, irrespective of what the macroeconomic environment is throwing at them. Yeah, 2023 came with a lot of shock. We have pre-election jitters. We have a lot of sporadic reform that was put in place immediately the new government came in. But I think 2024 will be more of a stable year and will allow businesses to better strategize. So, like for the FX switch in FX regime to crawling peg that hit a lot of companies badly. It was because in the scenario model of many of these companies, that was never captured. And so it hit a lot of them very hard. But in 2024, having learned from what happened in 2023, and given the fact that global inflation is also expected to moderate, which will also cascade down to Nigeria from the point of reduced imported inflation, and also expectation that on the domestic level, right, the government will then, will now have more concentration to focus on governance than politicking and every other thing that took center stage in 2023. There was distraction of the tribunal at some point, but now it's the time for the renewed hope the renewed hope strategy rather to be rolled out. So we think that there will be a lot of stability in the macroeconomic environment in 2024 compared to 2023, and this should support performance of companies. Expectation around inflation too is a bit decent, though it's still going to be very high. So we expect inflation on average to moderate, at least on a base case, about 22.1%, which will be far better than this year, because inflation this year will likely average about 24.9%. So by and large, we think that companies will be able to strategize better. Cost pressure that hits them badly this year will not be there next year, and it should tell on their performance.
Yeah, so much to look out for, and we know the major economies are already talking about possibilities of rate cuts going into 2024. But looking at our inflation rate, I'll see if that's in the cards at this point. But thank you so much. It was great having your perspective today. Damilare Ashimiu, macroeconomic strategist at Afrinvest Research and Consulting. Thank you so much, and happy holidays. All right, now let's get a check on all the stories now. See, Senegal is set to begin the operation of Africa's first ever electric bus rapid transit network in the country's capital by January. The 100% all-electric BRT system is part of a comprehensive plan to restructure Dakar's public transport network by 2025, as well as a key project of Senegal's roadmap. The transport system, which will cover about 8.3 kilometers of Dakar, is a deliberate effort of Senegalese government to reduce atmospheric emissions, the carbon footprint associated with transport in Dakar. And the World Bank predicts that diaspora remittances to Nigeria will surpass $20 billion by the end of the year, contributing to a 1.9% increase in total remittances to the region. The latest migration and development brief indicates that global remittance flows are expected to continue growing in 2023, albeit at a slower pace. Remittances to sub-Saharan Africa is estimated to grow from $53 billion in 2022 to $54 billion in 2023, with projections indicating a further increase to $55 billion by 2024. Well, despite a 2% growth in remittances to Nigeria, the overall pace is slowed by sluggish growth in high-income economies, where many sub-Saharan African migrants income. See, Nigeria is accounting for 38% of remittance flows to the region and experienced a 2% growth, while Ghana and Kenya posted estimated gains of 5.6% and 3.8% respectively. And in the third quarter of 2023, smartphone shipments in Nigeria and other African regions showed a noteworthy 12% year-on-year growth, totaling 17.9 million units. Report from Global Research. Despite facing challenges such as macroeconomic issues, import restrictions and currency volatility in key markets, including Nigeria, the African smartphone market showed resilience during the same period. So the global smartphone market, on the other hand, experienced a 1% decline. Well, that's the show today. Thank you so much for watching. I'm Ladi Williams. Remember, you can get more details on www.channelcv.com. And remember, if you must take profit, find the top. Bye-bye.